Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 29th of April 2019. My name is Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes, but as it's a Monday, of course, we'll look at things from a weekly standpoint. One or two key points to flag. First of all, the euro dollar. The euro pushing a little bit better against the US currency this morning, however, down on the week by around 0.86%. So the euro really still very much on the back foot and trading with a 111 handle this morning. Elsewhere, the Australian dollar bouncing away from that key 70 level, having tested briefly below it on Friday's session. We're up by around 0.25% in early Asian trade this morning, but still down by more than 1% across the course of the last week. So more work to do there for the Australian dollar. One that we haven't looked at for some time really, the US dollar against the Chinese yuan, and the dollar has the upper hand here, up by around 0.35% over the course of the last 7 days, though the yuan was trying to fight back early this morning. And elsewhere, the dollar has taken money off of both the Canadian dollar and the Mexican peso, taking 0.82% off of its near neighbour Canada over the course of last week, and just under 0.5% off of its southern neighbour Mexico and the Mexican peso over those 7 days as well. Dollar index for its part up on the week, up by around 0.69%, marginally lower this morning in early trade, but starting out on the front foot. And against commodity-related currencies such as the South African rand, the dollar has also been pretty dominant. Yes, it's a bit easier this morning, down by around 0.13% in early trade, but if we look at the weekly move, the dollar has taken 1.47% off of the South African rand, so the rand's still very much on the back foot there. Okay then, what's on the calendar? Events that may move the markets today. Well, first of all, let's just point out that it's the start of an extended holiday in Japan, and we'll come back to that a little bit later in the video, but Japan on holiday for Golden Week and the coronation of the new emperor. In terms of data due out this morning at 8 AM GMT, we'll have the first set of data out of the Eurozone, and this a look at lending and the growth of the money supply, private loans data year on year to March, and M3 money supply data both monthly and year on year for March as well. So look at credit growth there. Then at 9 AM we cross back into Brussels and Europe and have consumer confidence, service sentiment, economic sentiment, business climate and industrial confidence data for the month of April. So our gamut of industrial and consumer confidence surveys there, a chance just to see how participants are really feeling about the strength or otherwise of the Eurozone economy. We pause then until 12:30 GMT and cross over the Atlantic for another bumper crop of data, this time in the form of personal income and consumption data out of the US. A mix of data here, kicking off with personal income for the month of March, then personal consumption expenditures for both March and February, I should say. And there are various other reports, including personal spending for February and personal spending in March. Anyway, net, US consumers account for sort of 65% of US GDP. So what happens here does have a bearing, and given those bumper GDP numbers on Friday, it will make sense to pay close attention to what the underlying trends among consumer spending and consumption are. We get a couple of hours to digest that data, and then at 14:30 we shall have the Dallas Fed Manufacturing Business Index for April, another of these regional Fed indexes that help put together the jigsaw about what's happening in US industry across the country. And then the last item on the calendar of note for today, 15:30, 3 and 6 month bill auctions from the US themselves. Okay then, breaking news and comment that's caught my eye overnight and over the weekend. And first of all, US stock indices close at new highs on Friday after Q1 GDP data surprises to the upside. It was a significant beat, well above any expectations that I'd seen, and as I say, did really come as a surprise on Friday. Meanwhile, Spain's Socialist Party has claimed victory in the country's general election held yesterday. However, it fell short, well short as well, of a majority of the votes, and must now seek to form a fresh coalition government. So although the Socialists have claimed victory, we're possibly no closer to a resolution to the electoral woes of Spain, at least at this point in time. Oil prices have continued to weaken, with WTI, that's a US-centric crude contract, down by around 4% over the last 7 days, and this despite Friday's commitment of traders' data showing a growing bullish position in WTI contracts. I think I'm right in saying that the bullish position moved to a 6-month high there. Of course, that data was gathered on Tuesday, so there may have been something of a disconnect there. Meanwhile, Russia and China begin a series of joint naval drills today as US warships have crossed the Straits of Taiwan. Of course, there's plenty of political debates and sabre rattling about control of the South China Seas and other key areas there off of the coast of China. But interesting to see the Russians and the Chinese cooperating here. Okay then, food for thought and something to take away with you into the trading day and beyond. And why not think about this? Friday's commitment of traders reports showed that hedge funds and other large speculators had pushed their VIX, that's the volatility index contract, their VIX short positions to a record high of some 177,754 contracts, suggesting that they expect volatility in US equities to remain low. However, with Japan on an extended holiday and Apple earnings due tomorrow, are they being complacent is the question I want to ask. Now, the reason I say that is because it was an extended Japanese holiday and a profits warning from Apple that triggered the flash crash that kicked off the trading for 2019. If you remember, over the evening of the 3rd and 4th of January, we saw sharp falls in the yen and related currencies with the Japanese on holiday. Could we be setting ourselves up for another fall tomorrow? Well, remains to be seen, but it's something to think about, and the charts here from Counting Pips show quite clearly the build in the larger speculative short position here, the line in green. Okay, it's risk warning time. Please do take the time to read this risk warning thoroughly, because trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. And as I say, do take the time to read this risk warning thoroughly, please. Thank you for your time today.